This is your Wall Street wake-up call. Goldman Sachs is out with second quarter results. Profit of $3.72 a share, beat estimates of $3. Revenue of $7.9 billion, topping forecasts of $7.6 billion. With me now from London is Josh Mahoney, a market analyst with IG Markets in London. So Josh, Goldman Sachs easily beating estimates, joining Bank of America, Citi, and JPMorgan. Companies that all reported better than expected earnings, although Goldman did report lower revenue year over year.
Yeah, exactly. It seems to be a running theme that essentially everyone came into this earnings season thinking the banks were going to suffer. Of course, we've got this low interest rate environment really continuing, and with what's happening in the UK, the expectation is that's going to go on for some time longer. People did think that we weren't necessarily going to do too well, and actually the banks are outperforming expectations. Definitely worth noting the fact that potentially expectations were a little bit too low, and that's why we could be seeing so many of these banks beating. Now, ultimately, many of these banks had a pretty shocking start to the year, and as such, if you look on a year-on-year basis, many of these numbers are down quite heavily on a year-on-year basis because of the fact that the beginning of the year in particular, the fixed income currency commodities area of their trading business generally suffered very heavily because we saw a big sell-off in terms of the indices at the beginning of the year. We have seen a big pickup, in particular with these numbers today, a big pickup in that sector. They have gained market share in the FIC business, not done particularly well in terms of the equity space. But one thing definitely worth mentioning is the fact that we obviously have the whole big moves, big volatility around this Brexit or the EU referendum.
Right.
Now, these numbers only really factored in 1 week of trading around that referendum.
All right, and that is an important point. You mentioned some of those divisions. I also want to bring up investment banking. Revenue was up 22% from the first quarter, but down 11% year over year. And this makes sense amid the sluggish IPO market we saw in the first few months of this year, right?
Exactly, yeah. I think, look, IPO market is not particularly doing too well at the beginning of the year. It's starting to pick up, and more notably, I think the area that's going to really pick up is going to be M&A, because, of course, we've seen it already with this SoftBank takeover of Arm this week, and I think that's just the beginning. I think that there's the likeliness that people are going to start trying to grab bargains over in the UK, and Goldman Sachs being one of the biggest M&A banks out there, they're likely to really try and capitalise on that. So I think they do have room to grow in certain areas, but in terms of of FIC, I think they've really outperformed.
All right, Josh Mahoney, a market analyst with IG Markets in London. Thanks for your time. I'm Scott Gamm, and you're watching The Street.